Preface. A credit card happens to be one of the most contentious products amongst all the monetary tools that are accessible. Most people pay their expenses using credit cards. However, the leaders and financial experts about using credit cards have completely mixed reviews. In fact, there are some who are adamant on destroying the powers of this financial instrument. A credit card is merely a tool, and whether or not its services are detrimental or obliging depends on how the users use this tool. A credit card may not be something for everyone. If someone lacks the quality of self-control or responsibility, then a credit card may not be their piece of cake. Introduction. A credit card basically lets an individual borrow money from their bank in order to make purchases. The bank gives a limit of anywhere between 20 to 60 days. This is known as the interest-free period, and the bank doesn't charge any interest on the sum that is borrowed. This sum should be returned within the set period, after which interest is charged on the amount that the individual owes to the bank. If someone manages to pay a part of the debt but keeps a balance of the remaining, then interest is charged on the balance amount. All cash advances don't enjoy any free grace period, and interest is applied on it. All banks issue credit cards, private and public, and the rules and interest rates are different for each one. The cycle of due date and interest is quite vicious, and people tend to get caught in this cycle. Non-payment or late payment tend to spoil the credit score, which happens to play an important role in buying homes, assets, vehicles, or anything big. While credit does have its own benefits, it is best that the borrowed money is paid back on time, else one should be ready to pay heavy interest and penalty. The interest and penalty at times build up and seem to be a never-ending trail of charges that you would have to keep paying. While we are all living on credit cards, is it actually worth keeping one? To understand the risks associated with credits, it is important to understand a credit card in detail. Who issues credit cards? Can anyone get a credit card? What will happen if you don't pay the credit taken back to the bank? What are the advantages of having a credit card? And finally, the risks associated with a credit card. A brief history about credit cards. Jonathan Mark Kennoy, an American archaeologist and professor of anthropology, says that the theory of values instrument to denote banking transactions go back 5,000 years back. The Mesopotamians then used clay tablets to trade with the civilization of Harappa. Coming up to 1800s, to the period of America circa, the traders made use of charge plates and credit coins to the ranchers and farmers so they could pay their bill once they managed to sell their cattle or harvest their crops. A more advanced version of credit card was in 1900s, when some oil companies and departmental stores in the United States issued proprietary cards which can be said to be what is known as the store cards of present day. These proprietary cards were accepted only in the stores of the issued store and were to promote customer loyalty rather than the convenience of the customers or the store. Later, in 1946, a banker by the name of John Biggins from Brooklyn launched the Charge It card. The purchases from these cards were sent to Biggins Bank, the intermediary who reimbursed the trader and got payment from the customer. This was known as the closed-loop system. All purchases were confined to local, and only the customers of the bank would be able to get a Charge It card. After 5 years, Franklin National Bank of New York issued a charge card to one of their loan customers. After the war, there quickly emerged more cards, entertainment charge cards and 2 dining cards. The Diners Club card was the result of a discovery made by Frank McNamara in 1950, when he forgot his wallet at Major's Cabin Grill, New York, while he was attending a business dinner. He, along with his business partner Ralph Schneider, came back to the restaurant with proposal of Diners Club card. The card is used basically for entertainment and travel only, and this card quickly became quite popular, gaining 20,000 members within a year. The purchases could be made in credit, but it was a charge card, so the full bill had to be paid on the set date of each month. Launched in 1958, the American Express card had an entirely different origin. American Express was established in 1850 and was a competitor to United States Postal Service. American Express introduced money orders in 1882 and in 1891. They also introduced travelers' checks. They came up with the concept of travel charge card in 1946, but the thought did not shape out quickly, and Dinah Club got the recognition in 1950. However, the company had its own milestones to add, and in 1959 became the first company to issue a plastic card which replaced the celluloid and cardboard. 5 years, and American Express had 1 million card users, both foreign and domestic. Soon, some of the leading banks would issue their own consumer cards, but with something new. The users wouldn't have to settle their bills in full every month, but they would be able to move ahead their balance credit with a certain charge on it. Year 1958, Bank of America was the first who started sending unsolicited Bank AmeriCard credit cards to California markets. By 1966, the Bank AmeriCard was national and also became America's first licensed credit card. This card would come to be known as Visa later when it gained international presence. In the same year of 1966, some banks in California got together to form the Interbank Card Association, ITC, which became the next most famous card in United States, MasterCard, which is known as MasterCard worldwide presently. Visa and MasterCard both were backed by influential board members. The card associations functioned in an open-loop system, where the interbank support and transfer of funds was compulsory. Earlier, the banks were obligated to select between MasterCard and Visa Association, but later the regulations were bent, which let the banks join both the associations, so their customers could have both Visa and MasterCard. Rules, regulations and laws. By 1970s, both bank and non-bank credit cards became famous, and there were laws that were set up to address the rising complaints from the consumers. Some of these laws were as below. The Fair Credit Reporting Act of 1970 banned the collection and use of data from the credit card. The Unsolicited Credit Card Act of 1970 forbade all issuers from mailing active cards to consumers who were not interested or had not requested for them. The Fair Credit Billing Act of 1974 modified the Truth in Lending Act to stop obnoxious billing practices and allowed the users to disagree or dispute any billing errors. Also, in 1974, the Equal Credit Opportunity Act was ratified, prohibiting lenders to differentiate against applicants based on religion, gender, national origin, marital status or race. The Fair Debt Collection Practices Act of 1977 modified the Consumer Credit Protection Act to forbid destructive debt collection and rewrite the debtor's Bill of Rights. In 1986, when Sears Corporation made their debut in the market of credit cards in the Super Bowl, it later led to the company filing a major lawsuit against Visa and MasterCard for averting their association banks to issue Discover cards. The Supreme Court of the United States did not hear the defendants, thus permitting all banks and other card-issuing companies to issue cards other than just Visa and MasterCard. When the Credit Card Accountability, Responsibility and Disclosure Act was passed in 2009, it was relief for the consumers and decreased the wrongdoings of the card issuers who added high interest rates, late and over-limit fees to their users even when the nation was hit by Great Recession. Technological advancement and makeover. After the introduction of magnetic stripe in 1960 by IBM to verify the credit cards, there have been a series of technological innovations. In 2002, the popularity of Visa and MasterCard rose so much that the market was flooded with keychain cards with the name of MasterCard, key fobs, and even switchblades that carried Discover to go. Cards were even personalized, and the users could add their favorite picture on the card that they were using. Both Visa and MasterCard introduced interactive cards that had LCD screens which generated one-time passcode. Soon, aromatic cards with different flavors such as pretzels, orange, etc. became quite famous, and they were issued by the Japanese company JCB and Commerzbank of Germany. How could the jewelers leave out the opportunity to earn? And they began designing the cards into jewelry. The trashed cards were reused and designed into beautiful jewelry. Women of all generations, especially the youngsters, quickly took to fascinating them. Soon, the radio frequency identification, or RFID, helped to verify the ID amongst cards that had the RFID chip and the RFID card reader of the trader. This led to an outrage of new fashion of watches, wristbands, and contactless bracelets. The card developers looked for more creative options and included biometric solutions such as iris, voice print, facial, finger and hand scans, along with RFID chip embedding. Finally, there was a global shift in the security of cards, which, from the RFID, changed to EMV computer chip cards that was initiated by MasterCard, Visa and Europay. EMV was far better in terms of security and was one of the best in payment solution. However, one does need a physical card. What does the future hold for credit cards? Mobile developers are now making it easier for the credit, and users actually don't need to carry their credit cards. Apple Pay and Samsung Pay enable the users to upload the card details and then simply wave their phone over the mag stripe or the NFC card reader. The security of this over-the-phone payment is thoroughly secure, and there are no chances of any hackings. Types of credit cards. There are different ways of taking credit, hence, there are different credit cards that are available. Banks and financial institutions will usually offer a list of credit cards as below. Secured credit card. A secured credit card is when an individual makes a deposit of a certain amount and the bank issues them a credit card with a limit of the same deposited amount. Say, for instance, if the deposit is $500, the limit of the credit card is $500. Since an individual has made a deposit against the credit card, the bank doesn't have to worry about the bill being unpaid, as it already has a deposit against it, which it can use to recover the amount. However, if the user uses it wisely and builds the necessary credit, one would be able to qualify for an unsecured credit card gradually in time. Also, the deposited amount would be given back after the period decided by the bank. These cards are usually given to individuals who have no credit history or a poor or bad credit history. Students' credit cards. They are designed specifically for the students, and most financial institutions charge very less interest on them. Although their limit is low, if they are used wisely, it is quite easy to build up the credit history. A student would have to be enrolled in a recognition college for 4 years to be able to get a student credit card. Standard credit cards. These cards are also known as plain vanilla credit cards. These credit cards don't have any exclusive features. Standard cards are very easy to understand, and an individual gets to have a rotating balance for a certain amount of credit. One uses the balance to make purchases, and once the bill is paid, the credit balance is made available to be used once again. Interest charges and late payment fees apply if the payments are not made on time. People who don't like or understand the concept of rewards or exclusive benefits of credit cards usually opt for this. Rewards credit cards. Exactly opposite of a standard credit card, a rewards credit card holder is remunerated in some way for every purchase made. Rewards given may vary on the purchase made and would be different for every category. There are three main categories of rewards got: travel, points, and cash. Travel rewards is also referred to as miles because every purchase gives miles which can be redeemed for flight tickets. The avid travellers usually pick such cards and utilize its benefit. The miles earned by a card used for purchasing flight tickets would differ. For every dollar spent on the credit card, the financial institution rewards the user with points. Once these points are accumulated to a given amount, they can be redeemed to purchase merchandise. Many credit card companies also redeem points for cash, gift cards, and sometimes for travel. Redeeming points could get an additional off up to 20% on the price of the gift card. Cash rewards or cashback are easy to understand and redeem. However, one should understand that one doesn't actually get cash. While some banks make deposits in the bank accounts when the cash is redeemable, or they can be redeemed as gift cards with the merchant partners of the financial institutions. There is always certain threshold set to redeem the cash rewards. Such credit cards are usually issued to people who have a good credit score. Reward costs also have higher costs compared to other credit cards. The annual fees and interest rates are both quite high on such cards. Plus, the reward points also tend to expire after a certain time limit. If one hasn't reached the minimum threshold, whatever points or rewards have been accumulated lapses because they cannot be redeemed. There are many catches in rewards credit cards. One should read the details of these cards thoroughly before taking one. Charge cards. There is no limit in these cards. Whatever is spent needs to be paid in full. There are no finance charges on them usually, nor is there any concept of minimum payment because the balance needs to be paid in full. If the payment is not made on time, it could lead to suspension of card, restriction of its usage, or late fees. Charge cards are given to people with strong credit histories. Subprime cards. A subprime credit card is issued to someone who has a poor credit history. Such credit cards have high fees and rates of interest. Although there are certain rules that the government has implemented on the maximum amount of fees and interest to be charged, the credit card companies manage to find loopholes in these rules and have them implemented. Although these credit cards are ugly when it comes to charges, people still apply for them and use them because most companies will not give them credit. Balance transfer credit cards. Although most credit cards have the feature to transfer balance, but there does come a special balance transfer credit card which offers quite less introductory rates for balance transfers for a certain time. Balance transfers also differ in promotional interest rate and some may even be 0%. A balance transfer credit card is considered to be good, but the promotional rate is low. However, people with very good credit histories will only qualify for such cards. Business credit cards. Business credit cards are meant for people who use it for business purposes. Such cards offer easy tracking of personal and business transactions. The credit card companies check the personal credit history of the owner before issuing business credit cards because the credit issuer would have to hold someone accountable for the usage of the credit card. What does the bank look for before issuing a credit card? The days are gone when the bank used to mail credit cards voluntarily. There have been bitter experiences on both sides, banks and consumers, which is why there were different acts passed by the legislation to protect the rights of each one. After many rules and regulations, the banks have fortified their walls and there are several criteria that they have set. Almost everyone who is of 18 years and has a certain income can qualify for a credit card in the United States. For students, having a steady income may not be necessary. People without an income or with a credit history are qualified for secured credit cards. If people